Welcome. Today we're going to talk about how to buy multifamily real estate with no money down. Yes, it absolutely is possible. This is not some hyperbole, get rich quick scheme. It's thousands of people have done it and continue to do it day after day. My students have done it. I've done it. It's really not hard to do, and I'm going to explain how as we get into this. But I'm also going to talk about why now is the perfect time to get into multifamily real estate. Now, I just did a YouTube video on the coming crash, real estate crash of 2021. You may want to go watch that because I'm not going to get into that level of detail. But I'm telling you, if there were ever a time to get into this business, it is right now. In fact, this is the chance of a lifetime, in my opinion. I think there's going to be an incredible transfer of wealth, and truly, in the next couple of years, there are going to be so many distressed assets, both there with businesses, with real estate, and opportunities to make money. And it's sad that it's happening. There's no question it's sad, and certainly that's something important to consider here. But the bottom line is, with crisis comes opportunity, and I've trained my mind to focus on the positive and the negative. I could bemoan the negative, and there's a lot of it right now, and a lot of people in pain, a lot of people suffering. But me, I like to focus on the positive in any situation. So, right now we're in the midst of this COVID-19 crisis. We have never seen unemployment in this country like we're seeing right now. Streets are empty. My wife and I, Tiffy, were just in Miami and South Beach on Lincoln Road, and I was floored that a bunch of our iconic restaurants that we love have permanently shut down. A ton of the retail is shut down. I would say 30% of the retail has shut down. And this is all over the country. Shopping areas are like ghost towns now. And, it was really sad to see. And a lot of these people are not getting their jobs back. I just saw on the news today, United is laying off 16,000 people. That's one of the airlines, and this is, it's all over that this is happening. And so, again, yes, we're heading into some pain, but with that pain is going to come opportunity. So you are in the right place at the right time, my friend. Now, it's September 2nd. And in fact, just yesterday, I just went live about this. Just yesterday, the CDC announced that there's going to be an eviction moratorium until the end of the year. What are some of these landlords going to do? So they haven't been able to collect rent for the last 3 months. Now there's another 3 months of rent they're not going to collect. Many of them are not going to be able to survive that. And it's frankly ridiculous, but I'm not going to go down that rabbit hole with you on the political side of this. But the bottom line is there's going to be a lot of pain, a lot of problems with landlords being able, multifamily operators being able to hold on to those assets, particularly in the smaller ones. And whole economies have shut down. So I will tell you, our GDP dropped 5% the first quarter of this year. Okay, it's the largest drop since the 2008 crash. 30 million people or more are getting unemployment right now. So to think that we're not headed for some real stuff in this country is naive. Okay, so that's why now is the perfect time. And I'm gonna share with you how you can get into real estate, be it multifamily or even other asset classes, with none of your own money. So stand by for that. But the thing I don't want you to do is to overthink this, okay? Yes, there's a learning curve, and I'm gonna tell you how you can learn from me later if you like. I've got a 2-day boot camp. It's $97 freaking dollars. I mean, it's nothing, okay? It's a duh. And so if you're interested, I'll tell you about that later. I don't sell anything there, so stand by for that, and I'll give you the information. In fact, there'll be a link underneath this video. But the bottom line is your timing's perfect, okay? There were a lot of deals done as well. Besides, forget the crash, there were a lot of skinny deals that have been done the last few years that shouldn't have been done. In the zeal of some of these operators, they paid too much. They didn't put enough money down. They didn't have operating reserves to withstand a downturn, and those are all coming back, my friends. So how do you buy something in real estate, nothing down? Here's how. This business, This business that I'm in, that I freaking love, is a team sport. Multifamily real estate is a team sport. And so when you go buy a property, you're going to have people on this team that are finding the deals. You're going to have people on this team that are evaluating the deals. You're going to have people on your team rather that are evaluating that. You'll have maybe one person that does the evaluation. You might have one person that finds the deals. You might have one person that handles the operations after you buy. You might bring in someone that's got a high net worth and a high liquidity to qualify for the loan. You're going to bring in what's called equity. What's equity? Equity is the down payment for the property. It's the closing costs. It's the money that you raise up front for operating reserves, so that rainy day fund, and for the improvements that you're going to make to the property. Now, I want you to pay attention to this video, and I want you to subscribe to my channel, because I put these videos out regularly. You'll have access to my podcast interviews, and you can become an expert in this business by taking in this information. But you got to buckle down and watch, obviously. Now, I'm going to help you learn the language of multifamily, the nuances, the nomenclature, as it were, the verbiage. Okay, so that you can speak intelligently when you're approaching people to build your team, when you can, go out there and make relationships and find these missing pieces. Because this, again, could you do this yourself? Sure. You can buy multifamily yourself, but most people don't, okay? I would say 99% of the people in this business go out there, they put a team together, and here's what you're looking for in your team. You're looking for people that are strong where you're weak. And anytime you get two people like that together, it can be a match made in heaven. On my podcast, I interviewed actually three young guys that had 70 million in assets between them. This is, it's been a while. It's called Young Rock Stars or something on my podcast, if you want to go watch that. And by the way, if you're interested in this business, you really should listen or watch my podcast. Very important. Now, out of those three guys, all three of those guys were a team of an analytical person to do the deal evaluation, with an outgoing person to build the relationships, raise the money, build relationships with brokers so you can find deals, build relationships with potential investors and partners to put deals together. So how do you buy multifamily with none of your own money? So I'm going to share that, but I'm also going to share all the different ways you can get involved in this business based on your skill sets, based on what you love. But I'm going to tell you right now, if you find a deal that pencils out, that makes sense, you'll be able to find the money. There is so much money looking for deals right now. People that are scared of the stock market, and they should be, because it's going to crash. Just listen to my podcast episode with the economist Harry Dent, or watch the YouTube video I just did on the crash that's coming. It's going to happen. In fact, the stock market crash will be the first indicator that it's happening. Okay, so keep that in mind. But if you've got money in the stock market, please get it out. Trust me on this. Okay. But anyway, if you find a deal that pencils out, that makes sense, you'll be able to get it funded. So let's talk about how you put your dream team together, okay? Well, it's networking. It's building relationships. It's building friendships. It's discovering what your strengths are so that you can shore them up with these other people on your team. And I have tons of resources. If you decide to attend my boot camp, I've got, here's an example of the resources that you get. But one of the things that you get from me is a book that talks about the questions you should ask when forming a partnership, okay? Important questions that you want to ask when you're forming a partnership. That's just one of the resources that you get, because you are basically effectively doing a partnership. And you could do a joint venture with someone. So here's an example of how you do a deal nothing down. I bought millions of dollars worth of property in my 20s nothing down, where I got partners. They put up the money. I did all the work. I rented. I found the deal. I rented it. I bought it. I got it closed. I rented it. I managed it. And we split the profits 50-50, and everybody was happy. So there's one great example. And there are people doing that in the multifamily space today. I've got one of my students that just did a multi-million-dollar deal that exact same way. Okay. So how do you put your team together? You build relationships. At my boot camp, we are having breakouts where you can meet other people, and we're providing a framework so that after the boot camp, you can connect and build relationships. So you can find people that have those complementary skill sets. And again, there's lots of ways that you can get involved in a multifamily deal. Sure, you can take it down yourself, but most people don't, because it really is a team sport. So how do you buy how do you buy money with none of your, how do you buy a property rather with none of your own money? Yes, it takes money to buy a multifamily property, no question, but it doesn't have to be yours, okay? And there are, again, lots of people looking for solid returns secured by real estate, and you can provide that to them. Now, yes, you have to learn this business. You have to become competent. Whether you learn it with me or you learn it from someone else, you have to learn it. And the reason that competence is so important, because once you're competent and you understand it, that equates to confidence, okay? So you'll have confidence. And with that confidence comes your ability to influence people, to partner with you, to invest with you, to do business with you. And that's the transition. Competence to confidence to your ability to influence, okay? So again, I talked about joint ventures. You could do a joint venture where, again, someone else puts up the money and you get a percent of the profits. You do all the heavy lifting. You're doing the sweat equity. You're doing the work. It's a match made in heaven, okay? For someone that's got their own business, maybe they're a doctor, a lawyer, own a business. They don't have time to work the real estate, but they'd love to get the returns and the tax benefits of real estate. Now, in a joint venture, I need to tell you that in a joint venture, everyone has to have an active role in the partnership. Everyone has to do some work. Like when I did it back in the day, this is 40 freaking years ago. I'm 60. It was in my 20s. But because it was a partner, it was a joint venture, because the partners had an active role. They signed on the debt with me, but they also, if I spent more than a certain amount of money, I had to get their approval. That makes it a joint venture. Now, there's also what's called a syndication. I'm going to talk about that in a minute, where you can raise money and give people a rate of return. Well, if you offer a rate of return to someone, you take their money and offer them a rate of return and they're not actively involved, you have to syndicate. That's not something to be afraid of. You just have to hire an SEC attorney and they'll do the paperwork, and it costs a little bit of money. I've done it for as little as $8,000. The average is probably $15,000. But if you're buying a property for $1 million or $2 million, it's a drop in the bucket. And again, you can raise the money to cover that, okay? So it does have to be your money. I'm sorry, it does cost money, but it doesn't have to be your money, okay? There's so much money looking for deals right now. So a joint venture is one way where everybody's actively involved. So that's one. Now, syndications are also another way. And with a syndication, again, you're putting a team together of the general partners in that syndication. And in that general partnership, you may have someone that puts up what's called the at-risk capital. So they're putting up the earnest money. They're putting up the costs to do the due diligence of the property. They're putting up the lender fees, the third-party reports that you're going to have to get for, appraisal, a survey, an environmental report, things like that. Those cost some money. So someone gets a piece of the deal for putting up the at-risk capital. Okay, that's what it's called. Someone may get a piece of the deal for finding it. Someone may get a piece of the deal for raising the equity for the deal. The equity, again, is the down payment, the closing costs, and the money you're going to put aside for operational funds, and the money you're going to use to fix up the property, right? That's called CapEx, by the way, capital expenditures. That's the fix-up money. But all of that is called the equity. It's the money you bring to the deal. It's not the debt. The debt, of course, is the loan, but the equity is the other money for the deal. Okay, and investors will put up the equity. Now, the beautiful thing about a syndication is when you put that together, you're also going to have to qualify for debt, okay? But the team qualifies, not you personally. That's what's so beautiful about this business. So if you go borrow money for a property, typically, if you're doing what's called agency debt, which is non-recourse financing, where they can't come after you if they foreclose, they can only take the property, that's non-recourse. If you do that, you have to have a net worth equal to the loan amount, okay? But it's the team's net worth. Also, you have to have liquidity in the bank equal to 10% of the loan amount after you close, post-closing liquidity. But again, it's the team's liquidity. So literally, you could learn this business, and you have to have experience. You have to have some experience. Now, to get this non-recourse debt, and this is typically in a loan of $1 million or more, which is not becoming that big of a deal anymore. But here's the thing: if you come and learn this business with me, and you find a deal, and you put a team together to someone that's putting up the at-risk capital, and you raise the equity, you might get that from one person. You might find one person that's got some cash. Maybe it's a doctor. It's got a high net worth, and got a great balance sheet that shows liquidity, and they've got the net worth requirements to get that loan. And then you can actually hire a property manager, a third-party property management company to satisfy the experience component. So literally, you could do this with one person. Okay, that puts up their balance sheet. By the way, if you put a team together and you're buying, let's say, a really large property, 10 million, 20 million, 30 million, you might need 3 or 4 people on that team to satisfy that net worth requirement, to satisfy that liquidity requirement. That's how we do it. I used to have a $50 million net worth. If you know my story, I lost it in 2008, and I'm on my way back. But the point is, if I bought a $50 million property today, I would have to have other people come in as GPs to help me satisfy that net worth requirement and probably even the liquidity requirement. And that's okay. That's how everybody does this. But again, you can put this together. Now, I'm throwing a lot of stuff at you. I'm trying to educate you and give you as much information as I can. And it may seem a little intimidating right now, but I can tell you, there's what's called the law of the first deal. It's the scariest, it takes the longest, it's the most stressful. And after that, you're like, is that all there was? And I see this in my students all the time. It takes them 8 or 9 months to get that first deal. And after that, next thing I know, they have 600 or 1,000 doors. And that's just how this business works. So don't be intimidated by this. It's like anything else. How do you eat a whale one bite at a time? You just focus, you apply yourself, you make sure you know exactly what it is that you want and why you want it. So you're motivated, you've got that burning desire, okay? And that's one of the first things I do at the event is take you through a process to get you aligned with exactly what you want. Because I want to tell you, the knowledge is 10% of this. I want you to know this. This is really important. The knowledge is maybe 10, maybe 20% of this. 80 to 90% of your success in this or any business is your mindset and your psychology, okay? And I help you with that. And one of the first things we do at my boot camp is a goal-setting workshop, and I've got a guide that help us through that, goal-setting worksheet here. And so really important that you recognize that. It's 80 to 90% of this is actually taking action and just doing it. Like Nike says, just do it, okay? The 10 to 20%, the mechanical knowledge, if it was just the knowledge, there'd be a bunch of wealthy librarians and college professors out there. It's the do and it's the keep doing. Because, inevitably you're going to get your butt kicked or your nose bloodied, but it's knowing what you want and why you want it that's going to get you back up to take action. So again, I help you with this at the event as well. Now, when you do a syndication, so you'll have maybe somebody put up their at-risk capital on the team. And again, one person could do all of this, or you could have different people doing these different pieces. You have maybe one person that finds the deal. You have someone that helps you evaluate the deal. In my program, we've got people that do all of this. But the point is, you can put this together, okay? And you've got maybe someone that manages the asset after you close on it, manages the property management company. It's called an asset management fee. Now, let's talk about the fees you get in a syndication. They're pretty exciting. I'm going to tell you, they're pretty exciting. So when you put a syndication together, you have an acquisition fee. It's customary, it's expected. It can be anywhere from 3 to 5%. We charge 3% on our deals. And you earn it because you might kiss a lot of frogs before you find that deal that you actually close on. And so you earn it, you deserve it. And investors are used to seeing that on a deal package, that you're getting an acquisition fee. You also get what's called an asset management fee. And by the way, just to do the math on that, on a $1 million deal, a 3%, 5% acquisition fee is not a small chunk of change, okay? Then you also have most deals are more than that, honestly, when you syndicate. And so it can be a significant amount of money, and you earn it, and it's worth it to everybody involved. Now, an asset management fee is you managing the asset after you close. And that's, typically in our case, it's 2% of whatever the collected rent is. That's what we charge. And that's fairly standard because you need to be paid to manage the property management company. We have weekly calls and, we visit our properties regularly, and all that costs money. So that's expected. You might have what's called a disposition fee when you sell the property, that you get a piece for handling that disposition, or a refinance fee if you refinance like we do. We buy an asset. Our goal is to refinance it, get our investors their money back, and then we stay in it. That's why my podcast is called Lifetime Cash Flow. The goal is to create lifetime cash flow. But again, these fees are customary and they're expected. Know this, and you might be resisting. If you're in the single family or wholesaling space, you might be resisting actually doing a team concept because you've done it all yourself. I'm going to tell you, you've got to get past that because you're going to get further faster in a team. You'll find the deals faster. You'll raise the money faster. It's less stressful. The different pieces of the team where you might come in. You don't have to do, you could do all the pieces, but you don't have to. You could, just find the team, find the deal, for example. Do the event. You could be the analytical person that analyzes the deals. You could be the outgoing person that raises the money for the deals, raises the equity. And I see all these different hats worn by different people all the time. And my team, we've got these different hats. I'm not going to go deeper than that on the team members right now. If you're serious about this business, for God's sakes, come spend a couple days with me. It's $97. It's a duh. Okay, just do it. Now, so let's talk about how much money it actually takes to take down an asset. I mentioned this. Now, the financing is going to get tighter as this economy goes into a likely recession. Again, please don't fear that. Look at it as the opportunity that it is, because that's truly what it is. Up to this point, finding the deal has been the hard thing. Once this thing turns and gets ugly and the newspapers are talking about how real estate's crashed, it'll never come back. You know how they do it. They're doing it now in politics. They're going to do it with real estate as well. Just be ready for that. What's going to be hard in the future, harder, is going to be finding the money. And that's what this little clip is about. Because if you've talked to investors, if you start talking to them now and letting them know what you're doing, that you're getting into this business, and if you come to my boot camp, we'll give you what's called a sample deal package that you can present to one and say, hey, this is the kind of stuff I'm looking for. If we see something like this, are you interested? Or you have this conversation. Stuff is going to get rough in this business because of this eviction moratorium. There's going to be a lot of landlords that are hurting, and there's going to be deals that we can buy at cents on the dollar. Are you interested in maybe getting involved when that happens? But then you pre-frame them to say, listen, the news is going to say it's horrible, things are terrible, and that's when we pounce, my friend, because that's what we're waiting for. That's being a contrarian investor, and those are the wealthiest people on the planet, okay? Warren Buffett's got this quote, and I'm going to butcher it, but it's something like this. When people get excited, I get scared. When people get scared, I get excited, or something like that. And that's the truth of it, okay? When there's, and I hate this expression, but when there's blood running in the streets in the real estate market, that's when you want to pounce. That's when you're going to be able to buy stuff at 30, 40, 50 cents on the dollar. Now, I'll tell you, if you know my story, in 2008, I lost $50 million. So in 09, 10, and 11, when a lot of people were cashing in on buying deals, I was hiding under a rock for a while there. Hit me once, shame on you. It's coming again. You will not hit me twice. I will be massively capitalizing on what's coming. I'm just telling you, because there's opportunity, and I'm going to share in that opportunity. I hope you do too, because they are coming. I promise you, the deals are going to be there. So let's talk for a minute about the different loan types that are available for this business. We talked about agency non-recourse loans. That's Fannie Mae and Freddie Mac. So you'll need to get up to speed on those. But right now, up to this point, you've been able to get 80% financing. You borrow $1 million, you can get $800,000 in loan. That number is going to go down. It may go as low as 70% in some cases. So that equity will be 30%. You'll have to raise 30% of that money from investors. Not something to fear. You just get into a team. Everyone's talking to their friends and family and bringing the money in, and that's how it works. But, you'll have to pay attention to what the loan to values are as we get into this contraction. Then there's also bank loans. Now, unfortunately, in a contraction, banks will get hurt. They'll have what's called bank REO properties, real estate owned, and they are not in the property management business. So, again, you're going to want to build relationships with bankers as well, because if you can solve problems for them and take assets off their books, they'll very often finance them for you, and there can be some fantastic opportunities. Now, I will tell you something. If you listen to my podcast regularly, you're going to see a pattern. And you're going to see that the guys that have thousands of units started in 9, 10, and 11, and even 12. That's what we call a clue, my friends, because they capitalized on the '08 crash. That opportunity is coming again. So you got agency loans, you've got bank loans. Of course, you can do hard money loans, like in the single family space. In the commercial multifamily space, it's called bridge lending. Okay, so to get an agency loan, the property has to be what's called stabilized, meaning 90% occupied for 90 days. So that's stabilized. So if a property is distressed, you're not going to be able to get that kind of debt. So you may have to go to a bridge lender, or you may have to raise all the money to do the deal. That's not going to be uncommon uncommon either. There'll be people putting equity funds together just to pay cash for properties. And so again, you want to be talking this business up, talking to friends, talking to family, frankly, to anybody that'll hold still long enough and let them know that you're doing this business, because you want to have access to cash. It doesn't have to be your own money, but you have to have access to it. And you do that by building relationships. There'll also be seller finance deals of people that want to get out of this business. So you're going to want to work on finding potential investors or partners to invest with you in your deals. Start with friends and family, of course. But let me say this to you. If you're going to go to friends and family, for God's sakes, spend some time with me, learn this business. Just do it. It's $97. It's like I say, a no-brainer. By the way, the link will be in the notes below. And the point is, if you're bringing in friends and family, don't be a dabbler. Okay, learn this business, and don't dabble. And again, it's just a learning curve. Don't be intimidated by it. Just get in there and do it, and I'll help you do it. Just spend some time with me. Now, where do you find investors and partners to invest with you? Everywhere there are people, okay? Again, I facilitate that through my event. I've connected thousands of people at my past events, literally thousands that have done deals together, that have invested with each other, that have partnered together, thousands, okay? So come to my event, I'll help you with it. But anywhere, your gym, your church, your sporting events, anywhere you go, you should be talking about what it is that you're doing, okay? Now, the next thing you have to do when you're getting into this business, I want to give you a little more. I want to give you as much education as I can today, but I can't go deep. I go deep on the 2-day thing. But to start this business, you got to hang your shingle. Okay, so you pick a name, a company name. And a lot of the names in this business will end in like capital or real estate or equity or acquisitions. Like ours is REM Capital Partners. Okay, lots of people have some name. Fortune Capital or Fortune Real Estate or whatever it is. So you pick a name like that. You make sure that the Secretary of State, that the name's not taken in your state. And then ideally you'll go on GoDaddy or some other domain hosting site and see if you can find a domain name that lends itself to that, because you're going to want to throw up a quick $100 website, no big deal. But then I'm going to recommend that you also do a trademark search and make sure no one's using that name nationally, because they can send you a cease and desist. You can have a problem if you have a name that someone else is using. But do those 3 things: Secretary of State, domain name, and trademark search, and you're in good shape. And then get some business cards, and you're off to the races. And that gives you the credibility to go out and talk to potential investors. So that's one of the first steps you should do. And put together a nice website. And you can look at ours if you want. REM, I believe it's remcapitalpartners.com or remcapital.com, but there's lots of them out there. We help our students do them, but you can research this on your own. It's not a big deal. The next thing you've got to do is you've got to decide where you're going to buy. Okay, you can't be a generalist in this business. You want to be a specialist. You can't say, I'm going to buy anywhere in the country there's a deal. Nobody will take you seriously. Okay, so you want to pick a market, and so let me give you the first 3 markets to consider first. Okay, very important. The first one is obviously your backyard. Okay, and I call your backyard anywhere within a 2-hour drive one way from your home, because you can manage it in day travel. For example, I've got a friend, Jason, that I just interviewed on my podcast today, actually, and he just bought an asset in Cleveland, Ohio, which happens to be an hour and a half away from where he lives. So that's his backyard, okay? And so, obviously that's the best you can have is to invest in your backyard. But some people can't. If you live in LA or New York, there's not a lot of low-hanging fruit in your backyard. Sure, you can do deals there, but it's harder, okay? Now, so the first place is your backyard, 2-hour drive. Second place would be a place that you lived or spent time. Maybe you went to school there. Maybe you grew up there. It's a place you understand. Like for me, it would be Denver. I can still name every street across Denver because I own properties on most of them at one time. So that would be the second choice, okay? Because you know it, you understand it. You understand the industry. You've spent some time there. So that's option number 2. Option 3 would be somewhere where you've got boots on the ground. You have family or friends that have their ear to the ground. They know what businesses are moving in, businesses are moving out. So you can get a feel for the market, and you can lean on them if you need some help. So those are the first markets that I would consider first. And again, I would pick one and stick with it. maybe two, but one is best, okay? Because you want to become an expert in that market. You need to know what the top 10 sales points are and why people would want to live or invest there. Because when you talk to a potential investor, you're going to want to be able to rattle those off. Like in Denver, I know what they are. You know, it's quality of life. It's living here in Sarasota. I know what they are here. It's culture. We've got the Ringling Museum. And so, you know, you need to be able to rattle off the top points that make an area desirable, okay? And you can only do that if you dig in and learn the market. Okay. Now, here are the people, once you pick a market, that you should go after first, okay? The first 100 people you should contact should include brokers in that market, brokers that are selling the type and size property that you're interested in. Property managers, third-party property managers that are in that market. They know more about that market than you can imagine. They'll know what the, you know, where to advertise a unit. They'll know, you know, what the rents are in that market. They'll know what average costs are for different line items as you're evaluating a deal. You know, and so property managers are a huge wealth of knowledge. Whenever we go into a market that we don't have an asset, we spend a lot of time interviewing property managers because we get a wealth of knowledge. So we'll interview a whole bunch of them. Even if we like one already, we'll interview a bunch because we get so much diverse information about a market. So brokers, property managers, lenders, local bankers. Again, with what's coming, this crash that's coming, if you've got relationships with bankers, well, first of all, they may finance you. I've got students that have got 100% financing. I interviewed somebody on my podcast, $1 million deal. He got it with bank financing for $5,000 down because of the relationship he had with the banker. So you want to develop those banker relationships. And you may get real estate owned, REO foreclosure property from them as well, that they may even finance, depending on the quality of your relationship. Start those relationships now. So local bankers, you've got to find an SEC attorney if you're going to syndicate. You've got to find a contracts attorney to help you with your contract when you write a contract on a multifamily. You don't ever do one on your own, guys, unless you're buying like a duplex or a fourplex. If you go any bigger than that, you get an attorney involved. I've written literally thousands of contracts. I'm not exaggerating, and I would always use an attorney if I'm doing a multifamily deal. Very important. You're going to want to develop relationships with potential investors. So you're going to talk to anybody, again, that'll hold still long enough and let them know what you're doing, that you're buying multifamily properties, you're getting ready for this crash that's coming, and you're going to capitalize on it. And would they have an interest in talking to you if you find a deal? You know, potential partners like that. So now, again, if you want to put this multifamily career or this side hustle in overdrive, for God's sakes, come spend 2 days with me. You will be so glad you did. I've had thousands of people attend my live stream events. I used to do live events. Of course, you know, everyone was sold out. I was on track to have 800 people in Orlando in May. And of course, we all know what happened with that. So I did it on live stream. I had 900 people on live stream. It was the largest event ever. Just had another one. We had, I don't know, over 700 people, I believe, at this last one. So, and we will help you network and build that team, and you'll learn what you need to learn, and you'll have the resources like these manuals and things to help you. I don't hold back. It is drinking through a fire hose. I'm going to warn you now. But if you're interested, first thing you need to do is start listening to my podcast for sure. Then if you want to go to my boot camp, you'll see the website below. It's multifamilyvirtualbootcamp.com. Use the code RODFRIEND for $50 off, and you'll be able to attend for $97. And you won't be sorry. So listen, come see me. I promise you'll be glad you did. And I'll see you in the next video. Take care.